Greetings, market rebels. Welcome to this week's macro measure combined with our sector situation video. It is, I believe it is Sunday, May 4th. It's right about 10 a.m. here on the East Coast. I'm Wayne, and we're going to get right into it after we take care of our trustee market rebellion disclaimer and our trustee market rebellion intellectual property rights notice. I am absolutely spent. And but then here's a review. Let's get right into it. Here's a review. Let me get my laser pointer going here. This will be very brief. Uh, we talked about T2. I think it had a pretty good run. And then there was news that came out. So hopefully, if you were involved in that one, you rolled up or maybe took profits or whatever. I think news undermined it. There was maybe a development. I didn't have time to check into it deeply. Anyway, yeah, I just highlighted everything really kind of in that hot pink color, just to kind of talk about, remind us where we were coming from mentally. I think a lot of the stuff that we talked about that was the bigger, more kind of tactical stuff, that seemed to have largely played out or been important. So that's really all your pink stuff there. Now you this is the one thing that might have sort of almost happened in spirit. I still think it's coming officially, but I think that that was what we were thinking in terms of the news neutral, most likely scenario is that they would try to work their way into it. So um, I think we had a little discussion about, hey, how does it make sense to recover this much with all this potential tariff uncertainty and all the rest of it, and what could be happening here in China, the ports in the U.S. and all that. And as we had noted, I think they did the old, really, they just did the cover story stuff with EPS, and it's again backward looking, but when they need to use it, they don't care, right? It's enough of a reason to just say, yeah, we're marking stocks back up because that's where we need to get them, and that's where the pain is for a lot of people. And I think that's what happened. I mean, I can't say for sure. You never can know for sure, but anyway, quick review there. You can always go back and check out that and kind of remind yourself of what we were thinking last week. This week, I'm going from, I'm trying to remember what was last week. What did we go with? Our title was, let's see, what was our title? I forget. News that, oh, right. Yeah, news they can use. That's so, yeah, I think that pretty much the title's actually probably says enough. Anyway, this week I'm going with almost like it never happened, right? Because that's almost you're almost there where they're moving things back up at such a rate that sure you're off the highs by several percent still, but if they put another one or two really good weeks together, just like they put together, amazing session after session with the news cycle, really propelling that, or let's say being manufactured to propel it. So that's what's going on, in my opinion. Like I said, we've seen this a gazillion times over the years. That's what I think I tried to share on webinars, and I think in this video last week. I'm absolutely exhausted and just mentally and everything else. So I just apologize in advance, but I just don't have really good recall on everything just because so many things are happening. Anyway, this week, virtually no review time. I just wanted to add that I think I might have talked about this, but they've got M2 ramping back up. There's the buyback bonanza has started coming back online. We had the CTAs and hedge funds poorly positioned according to some reports, others. And you get these big jumps that um, on the news, news they can use on this line right here. So that's what you got. And that's all there is to it, right? I think that really is all there is to it. So I see the permeable community back up to their same old trick. They literally are, the best online one trick ponies out there, so to speak. It's all bullish all the time. Didn't see a 20% drop coming in the market. Don't understand why it happened. No problems with anything. Right back up. Here's why, this, that, and the other thing. And I just have a problem with I just have a problem if you tell me, well, you should always be buying, it's just the nature of the market, and you're an investor and you have this long-term horizon. I get that argument to an extent, I really do. But when you're trading, I mean, I just don't see it, and I don't know how much it really helps people that are just always be bullish all the time. Um, no matter what. I just feel like I don't know how you can do that and really be honest. So right now, I think you have to concede that market breadth has roared back. I think you have to concede that you've got some other thrust type measures along with the Zweig, that these are all looking really good with what we've seen. And I just would reiterate that we can't know what the gang knows, right? We've already seen in this recent phase that these some of these players seem to be getting advanced, foreknowledge or whatever you want to call it as to what maybe is happening next. I don't know who the leakers are. I have no idea being how it's happening, or I should say being managed. I'm not even sure, but that's the real problem is if you're looking at this sort of logically and saying, well, wait a minute, Q1 was kind of a disaster. Q2 doesn't look like it's off to the greatest start. And rates are still up, and not a lot of key sectors are participating still. What's going on here? How's this all wonderful? You just don't know what they've got planned. And I think a lot of these people just are able to operate. So part of the buying that I didn't include to this point, besides like what's aiding this cause, poorly positioned, buyback bonanza, it could be legitimate stuff, and you just can't know that until well after they do. So we just don't know what's happening, and they probably do, and so that's why you've got to go with the flow, and that's why these are both blue, as a matter of fact, because even if you're mistrusting this, I would still tell you as a trader, you got to go with the flow. And so that's why I'm using like the word if you're going to concede this or that. I just that because I think a lot of people were thinking there was maybe more to go bearishly, and there still could be. I wouldn't rule that out either. It's just that I'm not the kind of person that just jumps in and says, "Oh, everything's wonderful again." I still think there's a lot of problems, economic problems, and other things, but it's really hard as a trader. You really don't want to fight against M2 and that type of stuff, right? You really don't want to fight against the liquidity. So, and it makes it really tough to be a bear when all these people do is fire hose liquidity into the economy somehow. And stocks usually go up in those cases. It usually finds its way into the market. Anyway, skipping down, I still think rates and key sectors are an issue, which we'll talk about. And then I would just say on this stuff, I'll just let a lot of it, kind of speak for itself. We are getting closer to the key confluences. We have to remind ourselves, though, that at this point, the intermediate term trend and the long-term trend, as we were noting, is still intact, right? So if you want to just rely on the charts and not have any concerns, you just have to admit that the trends are both kind of up, and short-term trend too, right? So I'm not saying these are confirmed. I'm not saying we're out of the woods. I'm just saying trading wise, coming into this week, trying to focus on how to approach the week and where we are and what could happen. I would still think it's more bullish. I don't think things are that overbought because we were coming from such a oversold condition that persisted for so long. And so it's having a long run into key resistance is not really what you want ideally as a bull. You'd rather have a base camp built and then launch your assault from there. That's a lot of longtime viewers know how I feel about that. I'm sure other people see the same things and just call it something else, but I've always just called it like a little base camp. Anyway, we still can't assume too that we're out of the news maelstrom. You just don't know when that could erupt again. So I would just again stay in the market too, right? It's not out of the woods. We would I think even if you're bullish now, you have to admit that it's not completely over, maybe. And so you again have to be nimble with your management, and that's why like something like a T2 from last week, you get a nice whatever pop it was, $10, $12, whatever it did, you could say, well, that's, it's only 5%, but yeah, it's 5% like in a week, so or 4 days or whatever it was. So that's why you've got to do at least do some rolls or trims or both. Anyway, this is a lot of this is repeat stuff just to kind of reiterate of where, how think quickly things could change. And I would just say this pink line here could find ourselves barely removed from highs that were made with a much more sparkly crystal ball. So that's what I'm trying to put in perspective is that you might wonder, well, wait a minute, if they mark this market up another, let's say 3 or 4%, you could just be a few percentage points off of the all-time highs. And meanwhile, a lot of things have really soured since those all-time highs were registered. And how does that really work out, right? But that's what I'm kind of warning against. That because going kind of see this line here, can't know what gang knows, right? So you got to just keep trading it, even if you don't believe it and you have concerns about it. As a long-term investor, it's a little bit harder, but it's also a little easier because all you say is that over the course of time, the market goes up, and that's true. And there's a lot of reasons that they don't really tell you as to why that happens. But one of them is certainly that stocks, get repriced with a dollar that's worth less. But anyway, it's a whole nother topic. Um, so I'm just finally completing this with this final line. So ours is not to question how it makes sense, and just don't sit there and say, "How does this make any sense?" Just trade it, right? Just trade the trend and the momentum. I mean, that's what we're doing, week in, week out. And as far as the longer, bigger picture, longer term, all that, as I said a few times, like I wouldn't have blamed anyone for putting money in the market when we were down near the 20% range in that vicinity, just because this is what they do, and there's this ever since I think Greenspan, there's just been this obsession with like storming right back into the market. You're getting when people are off sides, they just pull this off, and that's why you've seen so many of these V recoveries on the charts. So on that note, I'm going to briefly pause, and we'll get into the charts. Let me get this stuff out of our way here. We'll come back with the right the right chart here. Should be screen two, and we'll go in. I think I'm gonna have to go into a couple charts to make this clear. And there's just not much I can do about this because I've got to have some things to be able to make comments, right? I don't have it all memorized, and so on and so forth. So as many of you know, I keep a purple 200, and you've got the 100 and 150 just above here. So right now, we've gotten back to the 61.8 retracement of the on the Qs from the drop from the high to the low. Right, so it was a pretty stout drop, as you can see, and so now you're back up 61.8% plus, and you did get the 200 test done from the underside. So that's a good sign. And right now, I would not be surprised. That's why I keep hitting on this to see them push this even further. And so I would just kind of keep that in mind. And I don't think even if they do, it's over yet. Once they get above here, and ideally it gets above there and they retest this and hold and then go again, then I'd start to say you've got a whole nother, right? You're now officially going to likely embark on a whole nother um, leg higher after a kind of a violent but brief corrective phase. But again, that's getting ahead of ourselves a little bit. But right now, I feel like with it not being overbought, I feel like this could really still continue. It might need a breather, it might need a pullback here or there, but I still think it's likely to continue in the absence of news. As long as the news is neutral, not bad. I think it just continues. They continue to try to do this. So that's just where you are in my mind. I just when I look down and I'll bring up the try to make this RSI a little bit more. Here's your final candle in the RSI reading, which you'll see right there, is only in the lower 60s on the daily. You could say, well, intraday, it's a little bit higher on this view, and I would agree with you. But so that's what I mean. You could see a little brief pullback. Maybe they'll come back and fill the gap. I don't know. Maybe it won't be all up and away, but it wouldn't surprise me if they are able to keep pushing further. And so this is again why I harped on this. So I wouldn't be surprised if they get this a little bit further. We could see how long, if it can stay above the 200 or not. I have no idea, obviously, what news is coming, but this has been a really sharp recovery after this higher low that we thought might be here. It turned out to be one day later, and then they've been in pure rant mode again, using the news cycle to its fullest potential. So that's a look at the cues. In terms of the back off, I think if you back off, I mean, I think you have to look at the 50, the golden line right there. And I think you got some flat line-ish type stuff right around 475. So I would call it 475. Maybe you close a gap there if you're looking for a back off. The next level up to me has got to be the 100, 150, right? And that's at about 499-ish, 498, 499. So that's 2 more percent. So either way, you're looking at 2+ percent coming up as the next key levels to start to see how things are playing out. As far as market breadth, let's do that real quick. Let's take a quick look at the market breadth. I said, let's take a quick look at, there it is. So I'll have to bring this over, and I'm just going to leave the cues up there instead of the spiders, but this is all high right now, right? With what they've been able to do. You've got some really high readings, but not that they're the highest highs, but we've seen, but these are high readings and things are clearly, they're clearly improving, right? Dramatically. But like I said before, what you have to start worrying about from a breadth perspective is that it doesn't get that much better. And usually when you get too high on breadth, and they've gone all in this on the bull side, then you have that sort of at least a pause or pullback moment. So you got to kind of factor that in a little bit I think, into your thinking that, yeah, some of these basic market breadth measures are flashing that flashing that you may have gotten close to that. Maybe you're not quite there yet, but you're getting close to that where you've gotten a little bit toasty. So if you're a little toasty, you're at risk. I'll bring a little more data in for us here just to give you an idea. So if I kind of mouse over this, you're near areas that where you've kind of topped out before. And so it could create some kind of a phase like that where we have a lot of pops and drops, more of a narrow range rather than trending at some point soon, probably. But so don't get lulled into thinking it's only up and away. I do think it looks like it wants to go up still. Again, absent any news factors, I would still think that that's probably the most likely scenario is that maybe there's a brief pullback and they try to go again. But if that push doesn't turn into something bigger, then you might have reached the point where the market got a little ahead of itself and the market needs to kind of go into that chill mode and not really just continue to ramp, right? So that maybe isn't there Monday or Tuesday or Wednesday, I don't know, but you have to factor that in is what I'm getting at. So, but otherwise, you really can't say that, oh, this is only being led by a couple stocks. I think there's a lot of stocks that have been bought. I'm just not sure that the whole picture is as wonderful as they'd have you believe. Here's more of a chart that we did a few weeks ago, and that for the major index ETFs that kind of got rid of a lot of stuff there. So a lot of the indicators are gone, and this one is just a little more clear. So I think if you're really looking at it without your 200 and all that stuff in the way, the 493, so 1 more percent when you take out that 493.62 high, That's really your big structural thing you're working against in my mind. And then you start talking about right near the 78. So again, they could really just be a few percentage points off of the all-time high with another final burst here. If they could put that together. And again, I think a lot of people would feel like, wait a minute, a lot of these stories have been undermined, right? A lot of the spin that was going out there, a lot of things have been called into question. There's all kinds of sort of wild cards that popped up with these tariffs and trade, and so how's this even happening? And that's what I'm just saying. Like that's fine to think that way. It just don't. I wouldn't let that really, as long as the momentum's still there, I wouldn't let that impact your short-term trading. That's the whole thing. And I think a lot, I've seen this from, I've done it myself a long time ago, where you just factor in the econ and all that stuff too much in the short run, and then it has you being less aggressive or sitting things out or whatever. Um, so you've got to factor that in that way, where I don't want to miss out if there's another ridiculous burst, which there could be. So I think 577 in your spies, which is just about 2% higher. That's where that I'd put that at. That's the big level there. You could see this is the underside of another, we think, important support line. So you're going to hit that at about 570, let's call it 573. So you're 1 to 2% up, and you've got a couple different things that could impede your progress. I think there's a flat line and a high there, right near there, as I said, near that 576 and change, or five. Oh, my bad, 576.41 is the high. So there you go. So right near there, then I guess you got to start looking at even higher fibs. And remember, the more this climbs, in theory, and probably over the course of time, not that it's infallible, but the more this climbs, if it does, the stronger the retracement, the better the chances are that the worst is behind us, right? That means the sellers have kind of stepped away, the buyers are coming back, and the sellers just refuse to engage again. So at the moment, so that's the general idea, at least the way I look at it. So those are some of the numbers I would use there. It'll be interesting. The diamonds, I think, with the dollar being so smoked and all the Trump, he's doing this, that, and the other thing now, and it's all going to get better. They came in, of course, for these as well. They're lagging behind a little bit. They're not quite at the 61.8 fib the way some of the other indices are, but they're not far from it, and they're acting very similarly. So we should probably look at those on this chart too. And they are above, they're above that one line there. They're at the 50 in gold, and they've got to get up here. And really, you'll see there's a lot of resistance in different forms potentially, right? You've got the fibs coming in there. You've got your 200 in purple, the 100 in dashed white. The rust colored one is the 150 that I keep on my charts. So there's a lot of stuff that if this sort of takes this vector and just keeps going with it, you're going to hit all this stuff maybe later this week if they keep the rally going. And then that's when it'll get really interesting. If you're saying, well, what about other scenarios? Well, other scenarios would be they don't even make it there. That would be very surprising, not just in the diamonds, but in the other index ETFs that are the major ones, that they just kind of roll over and they're done. I did note earlier that sure, you could expect a little pullback, maybe a gap fill. I mean that they're done and they just go down. That would probably be news, right? That would probably be news that just they're kaput, the rally's over, and this starts plunging again. So I can't really tell you if news is coming out because they don't have me on those group texts. Um, so I just don't know on that. But right now, if you look at this just from a resistance perspective, this shredded right through here. And now you really want to see this hold, ideally above that line that I just made blue. Probably would be helpful just to hold above there if there is a mild pullback to start the week and then go. But really, there's not a lot of bad things to say about that. The other thing is, right, this is very interesting because really IW, I mean, there's some stocks that just the moves that have been made are just ridiculous, as usual. But they really have plowed into this, and I think this is one good sign that you have to like, that this is lagging behind dramatically, but it would be remarkable, right? If you start to see this really start to perform again, and just look at this. I mean, from the low of 190 to the high of 201, or you could say 191, that's a 5% move up in 3 days. So it got a little silly in a lot of places. But remember, we are coming from really, really oversold conditions. It's just that those were reached, nearly a month ago. So the fact that we're doing this now, I would expect a forceful move coming out normally, but really we didn't get that. They kind of slow walked this, and now they're turboing it later. But you got above the 50. You can see there's a great chasm between the 50 and the 100. You've got your fibs coming in at 61.8 near 206. So that's going to be up 3% more from there. Then you're looking at these highs right here, probably at 209 if you want to pick out another level. On the downside, I think you're going to hit with the rising 10, right? The rising 10 is the first thing there. The rising 10 is currently at 193.11. And then if it inches its way higher, right, you're looking at kind of the mid 190s, I think, for where the support's going to start coming in. 195, 196. And that would be if the 10 can start to do something. So the 10 is going to be lopping off data from back here and adding new data up here. So it should start to, continue. I should say it should continue to creep higher as it stands right now. But they really seem to have come after these as if it's like the deal of a lifetime now. And it might be because they're so cheap relative to so many other things. And there's people that are seeing some real good value there. But the good thing about this to me is that small caps really, maybe you finally do get a really broad, let's say, better functioning economy that's not all about uh, certain things, right? Certain dominant factors that we've seen now by dominant companies, and you start to get more of a traditional, hey, this is really an expanding economy in a very meaningful way, not in a way that the government's sort of pulled the wool over our eyes with, which has been happening, administration after administration, in my opinion, for a long time. This is not, by the way, a pro-Trump comment. I'm just taking this from the chart saying that maybe there is something to that thought that maybe we do get something a little bit more. I don't know how that'll be pulled off, frankly. It would be ideal though if you did start to see these smaller, medium-sized companies start to really get somewhere. That's really a great sign, and that's really been absent for a long time. So it would be nice to see them come back, and I think this has really been a forceful move. I still think in all these things you are not out of the woods, to use the same tired cliche, but I just don't think you're fully out of the woods, and I'm not getting there, right? A lot of times these things do return to the breakdown point. I've talked about that many times. For me, that's going to be right near 225. So I'm not predicting that it gets all the way back up there, but that certainly would not surprise me, because well, I'll just do it. If I put a line here, you'll see, this to me is where the support just finally broke in a big way, because you could see the big candle there, and that's really not a well drawn line, but the big candle down, that's where the break happened. And I'm talking about where did it break from? The closest area is about 225. So that break, I've seen this happen many times where they kind of return to the scene of the break or the crime, and then it's over again. I don't know what that's all about, just like I don't know what weird gap fills are all about. I feel like it's almost like they made a deal with the devil that if you let us do this type of stuff, whatever, out in the crossroads or whatever. I don't know why these things happen, but they do. They have this weird proclivity for happening. And then you get there and then it falls apart. Not predicting it, just saying keep it in mind if you're kind of in disbelief as to what you're seeing. How could IWM be doing this? Like things aren't that great. I can still see problems. You're right, 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 and right, but you just don't know what's coming down the pike, and that's the thing. Um, how the market people say, oh, the market senses this or the market's anticipating, but what's the market basing it on? It's probably basing it on things that some of the best or most wired players, are familiar with. So how you become that, I don't know. I never made it that far. I don't think I'd want to make it that far, to be honest with you. I'd rather not feel like I'm part of something illegal. Anyway, the reason why I am not feeling more love for everything and feeling like it's over and hey, this is it, even though IWM really is roaring back, is really because of these sectors. And so this is transportation. I'm going to kind of pop that a little bit. Can you say, yeah, it's on the way back? It is. But I mean, this is if you compare the performance here and where you are, relatively speaking, right? You just don't look as good as other things. And they still did come after real estate, which is a little defensive. They still did come after that. Look at your discretionary, right? This consumer discretionary has not roared back. So two key areas to me that um, are good barometers for risk on and things looking pretty good. Everything's flowing through the economy, goods and services. Not really that great. Not really that great that people are out there, spending, spending, spending the American way, which used to be saving. But anyway, that's why I'm a little like, I don't know. That doesn't look that great to me. Great recovery in industrials. I guess that's, one of the benefits of the dollar getting the Dickens knocked out of it. This the basic materials have recovered, but they're still well off, right? They're still really subdued. I know it's not a high dollar index. I mean visually, they're still really subdued from where they once were. Now maybe they are near resistance here, so maybe they're going to break things out, and that'll be really a good sign. Much like they could break out here. I'll just drop a couple lines on here just to show because to me this is the first sign I go for. That's why I always talk about these lines, and that's you have a breakout potentially happening. Probably would be ideal to pull back towards here and then go again, but that they don't always allow for that. The mode they're in right now, where they seem to have a lot of people on the ropes and kind of stunned because there really is no resolution as we know it to anything. And you can sort of see that you're on the cusp of breaking out beyond resistance there too. So those are good signs, but this is still lagging, I think, a lot. To me, it just looks laggy. And just one close above there doesn't get it done. Just kind of like with triggering in the services we run. If you get a couple of ticks for 2 or 3 seconds above a certain trigger level, it doesn't mean that in our minds that the stock's triggered. Like we want to see a little more convincing action than just a tick or two. But I mean, this to me is a problem. Getting back to discretionary, getting back to transports. Now, on the flip side of that, though, I can jump over to here and say healthcare kind of backed off, which is a little bit of a defensive sector. As far as financial green blood running through the veins of the economy, they did perk up the XLF nicely. That may be breaking out. Again, I would put a line on here if you want to be bullish and start feeling a little bit better. This is for me, that's the first signs of breakout. I don't like the way in which this is happening. Ideally, right, I'd rather have seen this sort of uh, get a big burst like they did here and then work their way up and through more slowly and then go because it really gives you time to digest this whole thing. But that's not the game that they play anymore, in the way compared to how they used to. It's a lot of these just boom, boom, V type recovery. That doesn't look perfectly like a V, but you get the idea. So, on this one, I think you have to say, well, that looks pretty decent. It does. It's just probably a little bit overdone at the moment in the short run. And some of their other sectors, this looked like it might be heading for a retest, and they halted that, right? So that's the energy. So in terms of fuel running through the economy, so the energy demand not what it was expected to be or down. Is this the start of a higher low? That would be a good sign, right? Not for consumers, I guess, but just as far as the market goes, that would be a good sign to me. They start working this back up again, and then you'd have really your holdouts would be only here and here. But right now, this is still a holdout. So out of the kind of blood running through the economy or whatever life force running through the economy, you really only have the financials that are doing it really well at the moment. This is, you could say, well, isn't this on the cusp of breaking out? It might be, but it's got a lot more work to do just because it's been battered so much and there's so much in the way for this to get anywhere close to the highs. It has to make a massive move. So it's not acting like we're on the cusp of something great yet. It could change, but another couple of good signs are their former leadership sectors, which are XLK, XLC. Those are starting to do better, and or I should say continue to do better. They're still not out of the woods completely, but they are acting well. So leadership returning is good. And then getting over here, I should, what happened to my, oh, it doesn't like, I see. For some reason, it acts weird. Let's go into SMH, really just a key area. Remember, the NVIDIA earnings are, I think, looming later this month. But this obviously making new highs. I still remain unconvinced on this whole thing. But you have to say, right, where do you go next? Your 100, there's a lot of room there, and there 200 up here in the rust colored 150 are right there as well, higher. I think we have an bullish idea on here, by the way, in NeoWay Pro. So there's some good stuff happening in there overall, but I mean, you could see just how much it's lagging, not only behind the breakdown point, which again I would place right about there, where that big candle slices through my so-called support line. That would be an area that it might be able to try to return to right there. So that's going to put you up near about 250. So that would be really quite an accomplishment because you can see that it's not just some SMAs that are in the way. They're also declining SMAs, and they're the heavy duty ones, the 100, the 150, and the 200, as far as the daily charts go, that a lot of players follow. But you have to acknowledge, right, that they are swinging it back up on the short terms. But the issue is usually, right, I'm going to defer to the long terms. So there should at least be some turbulence if they do keep this going. It shouldn't really, under normal conditions, be able just to slice right through, hold above, and then go. Now, that all gets thrown out the window, unfortunately, especially with a person like Trump in the White House, because for better or for worse, depending on someone's perspective, Trump is just different in the terms of he's trying to actively go out there and make these deals and get these guys to commit to building this, that, and the other thing in the US and to reshore things and so on and so forth. And maybe he gets ticked off or whatever and he does something like online or whatever and sets talks back with China or whomever. I don't know. You just don't know what's coming next. So that's the challenge there, I think. But this, you could again do the same thing we have been doing, and you could just say, well, this is broken out, right? It kind of did. I put a line right about there. Some people might not like that one. If you don't like that one, if you don't like that, maybe I can sell you this one. But that's what you've got. So it is breaking through resistance if you believe in lines, with like I do. So it's doing that and it's holding, right? And so you got to give it credit. So that's why I'm saying intermediate term trend up, short term trend up, long term trend still up in this market. And it's not as perfect, I think, as the permeable community's already got everything. The one thing that they do have on their side is the stock market's performance over time, and they also have the devaluation of the dollar and just the liquidity madness that this country currently and fiscal madness the country currently operates under, I guess would be one way to put it. So they have that in their favor, but when they have a compliant so-called media that just cheerleads and doesn't care much about risk. So all that works in their favor. I'm also bullish myself in the sense that in the long run, I do think there's a potential for where where we're heading is really an interesting place that could really see rapid developments of different things due to the technology. I'm on board with all that type of thinking, though far from an an expert on it, but it's pretty obvious stuff. And so I do see that potential there. I'm just worried that, again, I think I said it a few years ago when they were starting to go bonkers with this stuff, that it just seems like we're in the early hype phase and that there'd be some turbulence on the way to the actual rubber meets the road and results start to happen. But we probably have, we're probably a lot closer to being through the hype phase and more towards the actual delivery phase. Now, I don't know how close you are. It's certainly beyond my my capabilities to know that, especially time limits that I've got. But I think that could be there as an argument on the bull side, where you could say, well, wait a minute, how does this all just turn around so quickly? It could be because there's really significant advances that just start coming fast and furious because of where they've been able to get this tech stuff to in the time they have between the initial crazy hype and now, it's been a few years, I would say. So at least that we've got that going for us. And there has been a big correction, right? If we look at SMH dropping, look at, we went down to 170, we were at 283, right? So you're talking about 90, right? So not quite, that's a 90, I'm sorry, that's 110 point drop at the low, right? So you could say, well, it was really inflated, but so 110 on 283, right? That puts you somewhere in the neighborhood of 40%. So that's really significant. So maybe, right, it's not completely over, but at the same time, that really is significant. So you have to pay it some respect, and it could be, right? I just wanted to end on that because I just don't think that, despite everything that's out there, that I think does not look good from an economic perspective. If they really do finally get this stuff to churn and it's done properly, which is a big, if, but if that happens, right, you could be on to something really big, finally, with a lot of the excess kind of wrung out of it. So, and this has been a leader before, probably has a great chance to be the leader again and retake that role, as long as there isn't any serious shenanigans among the bigger players that are expected to lead. And I guess that's another big if. But I think on that note, I'm going to start to wrap things up. I don't think there's anything else I can share. The VIX, they did knock down below those mid 20s. So now I would look for it to go somewhere between 18 to 20. About there's my next tier lower in the VIX. I'll just bring that up. And that would obviously happen only, right, more likely if the market continues on its merry ways, right? So I think you're going to probably going to work their way down there. But again, the news factor, we just don't know. But overall, you have to say short, intermediate, long-term trends are up. Let's trade the trend. Let's trade the momentum. Let's be smart about it because we're not just coming out of the gates now. We've been rallying off the lows for a while, and you're getting up towards key confluence areas. So that could provide resistance in many forms. So again, you might get a little bit of a back off, you might get a little turbulence, and then we'll have to see how the news cycle continues to develop from there and try to factor that in. But overall, you've got to be happy, and you had a great bounce, and you have to be thinking if a few more things fall into place, we can feel really good about the market. And it's not that far away, right? If they really get a hold of some of these key sectors and IWM keeps powering, you could finally have something, maybe really good developing. So we'll see. On that note, I'm going to wish everyone a great conclusion to their weekend. And I hope you have a great week ahead. I hope something that I share with you might help you out this upcoming week or some week in the future. And I'm exhausted. So I'm going to roll. But yeah, again, I'm going to just reiterate that I hope that at some point I can start to get time back to be able to do a lot of the stuff that I'd like to do for this. So we're just doing the best we can for now. So everyone take care. Thanks.